Good afternoon, traders. So it's 12:15 on the 31st of January. My name is Mark Owen from Trade and Trade. What we're doing is we're looking at the UK 100 right now. It's at a very interesting level. You can see highlighted in red. Very simple sort of trading strategy we're looking at here, which is resistance becomes support. So this is your ceiling, price bouncing off, price bouncing off. Market takes the stairs, goes up above, and it's now come back down to what was your ceiling becomes your floor. So resistance becomes support. Think of this in your home. So if you're sat downstairs in the lounge watching TV, you go upstairs to the bedroom, what was your ceiling now becomes your floor. Now prices accelerated into the floor here, and this is usually a signal where price usually likes to make its last ditch. We always usually like to see an extended move like this running up into resistance or running into support. You see, it's basically, in this instance here, it's the buyer's last strong push to try and break through, and then you get these indecision candles and the market reverses. So what we're seeing is a very similar but reverse effect of this here. We're seeing sellers making the final push into support, trying to break through. And what we'll do is we'll look for some kind of indecision or reversal pattern in this zone here, and then we'll look to take this market long back up towards the 7800 barrier, which is here, 7790. So we'd look to, if it is going to carry on and we're going to see extensions of this market, then, you know, obvious new highs, etc. We've got no real target to aim at, but we'd be looking at 7933 as an extended target, and then just above the 8,000 barrier if we're going to get to the golden ratio. But first target's always, let's just see if we can equal the previous high. So we're somewhere in around the 7750, 7770 would be first targets. Ways to look at trading this, multiple ways. You could look at a break of descending trend line. You could look for a change in cyclical patterns on a smaller time frame. You could watch for moving average cross. Many different ways, but these are ways for you to try and ascertain which would be the best way of trading this market. If you're uncertain or looking for clear strategies and technical ways to get into the market, then feel free to drop an email to mark@tradeandtrain.com, and you can make an inquiry about joining our Lifestyle Traders Club. You can do that by clicking on the website. The link will be below. Okay, so we're just going to fire across now to the dollar index, seeing as this is where the news is going to be predominantly featured around today. So what we see is, I'm gonna jump out even further. I'm gonna go up to the monthly time frame just so you can get an idea of the zone we're talking about here. So if we go back to 2008, 2009, 2010, you'll see this was a major structure point here. You've got about, essentially you've got 6 solid attempts at trying to break through this on a monthly basis over a period of about 2 years that it failed, and the drop off was significant. So again, a very similar setup to what we're seeing on the FTSE is resistance now becomes support. And when we drag this in on looking at the smaller time frames, we've got a nice fib extension coming into the 88 even handle. We're looking at that zone as 89 to 88, and we're looking for price to potentially turn in this zone and run back up to the 91, 92 barrier. As you can see, that's the next area of what would be resistance in this case. Okay, so if we look across this zone here, you can see, and if we stretch across, you see the market. What we're looking for is we're looking for that push back up into here. So a push back up from the dollar, regardless of what the FOMC says, technically speaking, this is what we're looking for. We just hope that the FOMC will sing in line with what we're seeing, obviously give some kind of hawkish statement in relation to the US economy and interest rates, etc. Therefore, we'll get our movement and bias that we're looking for, which is a short-term correction before we will then look to sell the US dollar at a later date. So how does that translate into our markets that we're currently trading? Well, obviously that'll mean we're looking to short euros, short sterling, long dollar yen. Of all the markets, we're currently short sterling, and we are long dollar yen, and we're short gold. We did send a few of these out on our free videos. For those of you watching this, you can see the market rallied up into resistance. We dropped down to a smaller time frame. We get our double top here, retest. We sold. This is where we sold. We're looking at selling this zone again, but to be fair, we didn't add in today just purely because of market sentiment and FOMC today. There's no point taking additional risk right now. Although it is clearly set up, technically speaking, for further downside. We see extended targets down at 136 before we'll then look to trade this long in line with the midterm sentiment that we're viewing for long dollar right now, to then looking at short dollar. So let's flip across to the Japanese yen, and we'll go out again. We'll head up the time frames to the weekly. Sorry, charts have just gone a bit haywire. This is a bit of back testing we're doing for some of our students earlier, showing a bit of education on how we can trade certain markets. But if we look in this region here, you can see the 108 area has been significant over the last sort of year and a half in terms of how the market rebounds from there. When we correlate this movement with the dollar index, it looks like we should get our push up that we're looking for, which will be the short-term dollar strength. Okay, and then we can potentially look to sell that dollar weakness that we're looking for from here. However, fundamentally speaking, we are looking at a few different scenarios with the yen, because the governor Kurada and Iwata have basically stipulated that they're on the way to the 2% inflation, although unlike the Fed and the ECB, they see no reason to cut or slow down with quantitative easing. So if they continue to see the yen appreciate, then expect some interference from the Japanese government if we don't get the move that they're expecting. So I look to see further weakness in the yen, which will be a break up towards 114, and then we'll look to use the 114 area as potential further longs. Okay, that's it from Trade and Train and myself, Marco, in today. If you did enjoy the content, please let us know. And to do that, all you need to do is hit like, share, and subscribe to the channel. Remember, it is free, and we look forward to seeing you in future episodes. Have a great day.